Welcome to another episode of That Crazy Triangle Guy. Here we are looking at my watch list. And, it's changed since I was looking at it before, but I was looking at this Bitcoin futures, CME futures here, and the premium to spot. Right now, it's about a $25 premium. It's trading pretty close to spot earlier and even below. And that's because if you click on here and on the daily time frame, you can see we have a contract change tomorrow. And I'm not sure when this is, if this is the end of the day today or the end of the day on Wednesday that this switches. But that makes a lot of sense. They would be similar in price now heading into that. And what would be interesting is what the premium will be after it switches. So that was just something I'm looking at. I don't know why I started off with this, but that's that. And I don't really understand all that stuff. And it's not because I'm an idiot. Although I very well could be an idiot, but the reason why I don't understand it is simply because I don't trade futures and all that kind of stuff. So if you're not really doing it, you can't really understand something unless you're actually doing it. So, but, I do have the Gaussian channel turned on here. And the reason for that, the reason why I started off like that was because I was looking at CME futures with the Gaussian channel. Now, if we go to the 5-day on CME futures, you can see that we are well above the 5-day Gaussian channel, but that's because it trades 5 days a week. And if you look at the weekly, it's the same. Pretty much the weekly and the 5-day are the same. So that's all well and good, and you can see the 200 daily moving average in red right there, and the top of the 5-day or weekly Gaussian channel here on CME futures. It's getting really, really close together, and I think that we do. I think that price action does come back down. I mean, we get this little bounce here to wherever, and then heading into April with the tariffs on the 2nd, and what else we got? We got the Fed cutting its the balance sheet stuff. Now everybody says quantitative easing. Let's get one thing clear. Nothing the Fed is doing is quantitative easing, and we will not see that for quite some time. You see that when the economy is in a mess, a huge mess, is when you see quantitative easing. What they're simply doing is slowing their quantitative tightening, just slowing it down, which also would have a positive effect on the markets, but it's not throwing new money in or liquidity or whatever you're talking about. So anyway, so we got that. We got the Fed easing its quantitative tightening. We have the tariff thing on the 2nd, and we also have the CPI data on April 10th. Let's get off of this chart because let's go to a regular Bitcoin chart, and we're going to have a lot of lines here. But you know what? So let's go to like Coinbase chart where there's no lines. There's fewer lines. I do have the moving averages turned on here as well. And we are on the 5-day, and as you can see, this is the 200-day moving average. And it looks similar to Well, no, it doesn't, because here you can see on the 5 day that we wicked into here, and even on the last 5 day period had a candle inside, candle body inside um, the channel. And when we've done that before, here, you can see what happened. We've come down to the center line of the channel. Let's just, you know what, let's turn this guy on and look back in time. Oh, you know what, I just messed that up. Even when we came out here and we wicked down into it, or we came down into it a little bit there and got a bounce, but then we came back down into it here. And then you can see at the end of you can just kind of see how we touched, and then fell into it here. And again, came down to around the mean band of the channel, although we did have a little bit lower here. But you can see the mean band acted as support until we did then end up going into a bear market there. Anyway, if you scroll through this yourself, you can just kind of get a feel with how we interact with it. Now here, when we came into it, we did come all the way down to the bottom of the channel. So the mean band and the bottom of the channel do act as support. Now this is a bear market here, where we did come down to the bottom of the channel. Now what was it back here? So you can see this is why a lot of people even say, or actually Gerber Baby in particular says that even before the COVID crash, we were already coming down into like the below the mean band of the Gaussian channel here. Although we did come all the way down to the bottom and get a bounce up to the top. Yeah, so you could say we were coming back out of this here, and then the COVID crash happened. But this kind of was already foreshadowing kind of a messy situation, I guess. When did we get that bounce? In January. But you know what? And a lot of the COVID stuff didn't happen until early 2020. But you know, my girlfriend and I were in the hospital. Well, I took her to the hospital for some abdominal pain she was having, and in I want to say it was December. It might have been December. It was still in 2019, and we both got, well, not real sick, but it was just a weird kind of sickness that didn't feel like any other cold that we had had. And so we both think that we got COVID in December of 2019, prior to any of this, you know, the major media kind of stuff going on, before anybody even knew what was going on. And it makes sense because we were in the hospital. So anyway, but we are talking about the 5 day Gaussian channel, and we only go back this far on the Coinbase chart. So here we are today, though, and we have entered well, we did enter here back in July. Yeah, July of 24. We came down to it on the 4th of July. And then subsequently on August 3rd, we're on the 5 day chart. So the week of August, or the 5 day period beginning August 3rd, and also September the 1st. The very beginning of September did come down into it further around the mean band. So I think we're in a similar situation here, where you can see that we have just did some wicks and this one little candle body in here. Now, we did start a fresh new candle body outside of the channel, which is interesting. And it's something to be aware of and keep in the back of your mind, because this may be different that we don't come down into the channel, but I think we do come down into around the mean band of the channel in the beginning of April. And that would be right around here in this time frame. Come down to the mean band. Maybe it comes up a little bit more. Maybe this little rally that we're having will bring this up a little bit steeper. And we don't necessarily have to come all the way down to the mean band. But if we did, so say like 77,000 right there, keep that in mind, around 77,000 would be around where this mean band could end up by the 10th of October, when we are looking for CPI data. Now, why are we looking for at CPI data? Because inflation is still really, really important, and the market's really concerned about inflation right now. And after the last FOMC meeting, I don't remember exactly what, but at the last FOMC meeting, I knew that this next coming CPI, that the markets were going to wait for this next CPI release coming up here before we'd see any real significant rally. Now, might some front run it a few days before? Maybe. I'm not sure about that. And of course, you never know what's going to come out of Trump's mouth, which could affect the markets, or like this just recent announcement with TrueFi, Trump, what is it? Trump Media and Technology Group. One of their branches, one of their arms, is True.fi, a financial thing, and they created a partnership with Crypto.com, and we'll be releasing some ETFs and energy focused products and stuff like that, and made in America focused products. So, what got me onto that? Oh, you never know what's going to come out of his mouth. I love Trump, but you just don't know. You don't know what's going to come out of his mouth, or anything like that. So anyway, we're looking at the 5-day now. What's important? That's the 5-day. When we go to the weekly, we are not in there yet, and that's good. It's good that we come down like this to the weekly, like we did here, like we did here. And this is like we were talking about back in early July and August, September. Where's the August? Oh, that is August there. This is July right here. Yeah. So we came right down to the top of the Gaussian channel. So in retrospect, I probably talked about this at the time, but you can see how the weekly Gaussian channel acted as support. Where did we dump down to when we were coming down here? And who would have thought that we would... I mean, we were so far away from the Gaussian channel at this point on the weekly time frame. Who would ever have thought that we would come down like this? And I remember at the time this was a big deal, because nobody ever thought that we would come all the way down here to below 50,000. There was a lot of liquidity down here, and I thought they were safe, and I thought I was safe down here. I didn't get liquidated, but boy, I had to de-risk a lot back in this time period, and it really, really pissed me off, because I was looking for, like, this to happen and then this to happen. And nope, we went this way. And we're kind of doing the same thing here. It's really pissing me off. But, so, something similar is happening here. And I think that over here in this week of October 10th, right where my cursor is, top of the Gaussian channel will be right around $78,000. Currently, it's at, what is it at? 75.5? Yeah. It's at 75.5 right now. So I think we're safe above. I think price action will stay above 75.5. Won't go below that. If it does go below that, then we're looking at this. Now we could get something like this where you see a wick here into the Gaussian channel where we do come into it a little bit and then we continue up and continue up. Now this took that's the middle of July to the middle of November. July, August, September, October, November, 4 months. So yeah, we could go from what 31,000 here up to six, so more than double Bitcoin price. Even if we did dip into the Gaussian on the weekly Gaussian channel a little bit, could still see a double in price over the next 4 or 6 months, something like that, or more. Yeah, I mean a big significant rally is what I'm saying. But dipping into the weekly Gaussian channel is dangerous and eventually would probably lead to something like this bear market, which is so. But anyway, you don't know how it's going to happen. If we did come down in here, maybe we could see a continued dump over the next few months as this comes up into lower 60s possibly. And what would that do? So I'm just painting both scenarios. We don't know what's going to happen. We could come down into the center of this where we traded over the summer last year. I don't think that's what's going to happen, but just have to watch how we interact with this. I think that heading into the first week of April and in the CPI data release on October. Why am I in October? April 10th, that we will come down to the top of the Gaussian channel around that time period on the weekly time frame, and that will be somewhere around that 77, between $77,000 and $78,000, something like that. And that would still not be of course, you know what, we're on Coinbase here, so maybe a few $100s difference between the index, and that would still be a higher low from back here where we hit 76 something. And what about the time before that? See, the time before that was like 78.3 here on Coinbase. So I might come below that one, but still not below this one. Now, if we go over here to this chart and just ignore all the other lines. Oh, see, this is better because I have it drawn out here. I have the top of the Gaussian channel kind of estimated here. And what I do see here, I have this yellow vertical line, dashed line on the week of April 7th. And what I see here, we zoom in. Whoops, we can't. That's as zoomed in as we can get. I see this convergence of lines here, all right around 77.5. There's an orange line, there's a yellow line, there's a green line. And let's go see what those lines are. And let's turn off our Gaussian channels. Well, you know what? I got a lot of lines here. And this green line right here is the neckline of the inverse head and shoulders pattern that we just broke through. Now, earlier on another, I don't know if I made a video about this or if I just texted somebody about it. I have three choices of a neckline. This yellow line here, green line, or this red line. And it appears that we did form this kind of weird little shoulder here. And we're on the daily time frame now. So it looks a little bit better like if you're on a 4-hour. But, and this is where we did break out. You can see. And we even came down and tested the top right there. Tested the neckline. And now we're exploding to the upside. And by the way, that target would be around $100,000. 102 up here somewhere. Now this target that I've drawn here, this measured move that I've drawn, you can see it doesn't go to the green line exactly. And that's because it was actually a measurement to this red line, not to the green line. So I just, instead of changing it all, I just kind of, and that's not even the right. Let's get rid of some of these lines. We don't need all of them. Well, I'll just leave that one there. I took out some of the other ones. And you know what? Let me turn off these moving averages too, because that'll clean up some stuff. All right, that made it a little less confusing. So anyway, it appeared to me that once we had this breakout that the green line was the official neckline. And I drew these based on, various, because this is a really strange head and shoulders pattern with the shoulder here, the head here, and this little tiny shoulder here. Inverse head and shoulders. So, it is kind of weird. And now, as you can see here, that we actually have almost, but not quite, come up to the red line. So maybe we're still forming the head, could be, if you look at it that way. And then coming down here again, once again, into this, down into here, we could form a shoulder. And that we haven't actually formed the shoulder yet. And what I wanted to do is then change this, because I have this drawn here to here, and anticipating where we would have touched it. We didn't quite do it here like I expected. Instead, we stopped right on the green neckline. And so if this were to be the neckline, it could actually be a little bit different. And I will change that right now, if I can. Let's just clone that and make it a different color. Like, let's just change it to that color maybe. And now I'm going to place it and pause you. All right, so I've placed it, and now we have yet another line to keep an eye on. And I placed it right here at the top. Well, see, the red line was here, making the end of the shoulder here. Now I've placed it over there. But you can see we don't quite hit it here. What would that even mean? Yeah, see, I don't like that purple line. Yeah. Then I'm just gonna remove it. I don't like it at all. All right, that's gone. So on April 10th, this green line, the neckline, comes right down here, and it intersects the top of the weekly Gaussian channel, right around 77.5, something like that. 78.2, actually. 78.23. But we have this line here. That I just thickened, that orange line. That orange line has acted as the ultimate level of support since 2023. And we came down to it just recently, right here, on March 10th and 11th. And got acted as support. You can also see the white line above it has acted as support. And the red line here. Red line, this is part of a channel that we've traded in since this whole frickin' bull rally. Since August of 2022, we entered the red channel and have been trading in it since then. This is the low of the market and the FTX collapse around 15,000. And you can see the red channel has pretty much been our support and resistance, and the center line too has acted as a magnet. And as we've gone along, we have fallen out of the red channel to the downside, but these other two lines that I've made completely parallel to the channel have acted as support always. Really pushed it right here in October of 23. And we did bounce out of the red channel a little bit to the upside as well. But the reason it's there is because for the most part it's acted as support. And the center line has acted as support resistance. And with few exceptions, like right here, this is August of 24. That was the 5th of August. On that dump down to the weekly, remember? We dumped exactly down to the weekly Gaussian channel, and we dumped down to exactly the orange line. Isn't that a coinkydink? And then also here in the first week of September, same thing down to the orange line. So this is what I think we're going through right now. Came down to it in August and September, a month apart, and currently we're doing about the same thing. Came down to it here in the first week of March. That was probably the CPI data release too, which was good, by the way, but I think the market's going to look for another confirmation. So now when we do get this dump into the CPI, if we do we only come down to 82? That's the question. Or do we come all the way down to the top of the weekly Gaussian channel? You can see the dilemma here. Back in August, we did both. But this time around, they're not intersecting. So that's just stuff to watch out for. Do we stop there at 82? That would be a good buy. And we won't know until we see what these candles are doing as we get closer to those dates. I do have these other lines here, which acted as something or other at some point. This orange one which has acted as, you know what, the orange, oh, the orange one goes all the way back here. What is this? This is our, yeah, this is our 108. 108 high, that's what the orange one is. And then it acted as, I drew it on a bunch of candles where it's acted as support and resistance. And if we did continue to follow that and hold it as support on October 10th, that would be, see, that would be wicking into the weekly Gaussian channel, but it would still be okay because we're holding that line for support. That would be like a scenario like in 2021 where we did wick into it and then still continued to rally, and Bitcoin price more than doubled, just over doubled in the next 4 months. So that is acceptable. So even if we do come into the weekly Gaussian channel down to 76.7, which would also, well, that would be a double bottom, pretty much. Yeah. Crazy. So see, you can see how these things just play out like this. That would be exactly, pretty much to the dollar, a double bottom. Yeah. So that's a scenario. 76.7 on the 10th of April. Or the neckline could act as support, which would keep us outside the weekly Gaussian channel. That would be around 78.3, 78.6 maybe, 78.5, let's say. Or the best case scenario, but both those scenarios take us down below this orange line, which has acted as support since 2023, 2020, yeah, since the beginning of the bull market, the bull rally, I should say. But yeah, no, the bull market. I was right the first time. And that's it, 82,000. So those are the things to keep in mind as far as I'm concerned. And let's see where the mean band of the 5-day Gaussian channel falls. And when we're doing this, I want you to note something on the Bitcoin US dollar index, as opposed to, where is this damn Gaussian channel? It's right there. As opposed to the other Coinbase or Binance or whatever. Now here we have these candles. Do they have it right this time around? Well, I believe they do. But you got to watch these candles because they don't always depict what price action is doing. Every candle should start and end where the previous one... Every candle should start where the previous one ended. You know what? Let's turn off the Gaussian channel because it'll be easier to see. I don't know what those colors are. Yep, they have it right now. I've emailed, or I've messaged them on their help center a bunch of times, and I swear to God, I think I'm talking to a bot because no one can be that stupid. And it looks like they finally got it fixed. But these candles weren't right before. You'd see like, they would just be totally out of whack. Like this one right here would be red and it would be starting here and going down here. It just didn't make any sense what these candles were doing. But apparently it looks like they fixed it so far. But always keep an eye out for that because, You just can't trust it. So let's turn that Gaussian channel on, see where the mean band falls. The mean band is currently at 74,100, which is way below anything that we've already mentioned. Oh, but by the time we get to the 10th, it'll be coming up, and it'll be right around. You can see the dotted line that I have represents the top of the weekly Gaussian channel. You can see how the mean band of the 5-day Gaussian channel is approaching that. And it looks like they'll be pretty close around this date here. So if we did come down to the mean band of the 5-day Gaussian channel, it would perfectly work out with the coming down to the top of the weekly Gaussian channel. So, and that price is, again, 77.5 to 77.8, something like that. And that would, this orange line would be acting as support, but not the inverse head and shoulders line, and not our line that has always acted as support since 23. So we got 3 different scenarios. We got, well, and then a 4th one is that we just fall into the weekly Gaussian channel. But aside from that, we got around 77.8. We have around 79.8. Let's make it easy. 77.8, 79.8, or 82. Really, it's a little more than 82. So 82,300. 77.8, 78. 77.8, 79.8, or 82 would be potential targets for the 10th of August, or about that date. And now as we go to the 30-minute, you can see that we are pumping heading into the it depends how zoomed in you are. Well, that is a pretty nice candle compared to the other candles around it. Heading into market open. And so let's see. We're about 87.7. Hey, on a daily, are we positive yet? So I know we were down a little bit on the day, but yeah, we're positive on the day now. And market futures here are just slightly in the green. And if you look at the liquidation heat map on CoinGlass and on the 12-hour time frame, you can see some liquidity up here. Let's see how much that is. When I'm on my phone, it doesn't always, there we go. Yeah, you got a little bit, about 24,000 on that one spot. 24 million, I mean. On just that one spot. So maybe about 50 million total surrounding it. So yeah, we come up and grab this little bit of yellow stuff, maybe around 88. It's right around 88. So that's a possibility that we do something like that. Of course, you never know if we just keep going then at that point. You never know if we're just going to come up there and grab that and then reverse, or just keep going. Usually you would just grab it and reverse. Sometimes you don't even get a lot of times you don't even get the yellow. I notice on the shorts they do that because I think the shorts are really helping to run the show here. And Well, looks like we're coming back down a little bit. But 88. That's interesting because 88, yeah, 88 right there is at the bottom of the red channel that I talked about earlier. So, yeah, they're keeping us below the red channel. Oh, I know what I wanted to bring up too. So, they're trying to keep us below this red channel, which would tell me too that it is more likely we're coming back down here, at least to 82, possibly 79.8, possibly 77.8, maybe even lower. I don't know, but I don't think so. And then as well, we also got rejected off of this dotted line right here, which you might not think is a big deal. But you can see yesterday we came right up perfectly to that dotted line, which was there before. It just wasn't penciled in. And if we click on that dotted line, not that one, there we go. And then we make it big and fat like that. You can see that that's a channel that we've been trading in since back here at 108. We've been trading downwards in this channel. Now, not perfectly, but if I zoom in, you can see how the channel has acted on, especially on closes, has acted as resistance there and support along the quarter line and along the center line right here. We got these wicks going through it, but very clearly quarter lines in the center line and the bottom of the channel are acting as support and resistance. We've come through it here. So I suppose if I cloned it and put another channel below it, you'd also see where this is acting as support and resistance. But regardless, we are traveling downwards at this slope within this channel here. And getting rejected right at the center line, right there. Whoops. Right there, perfectly at the center line of the channel. So they want us to stay in the bottom of this channel. And oh, well, this is interesting. The bottom of the channel, the green neckline, and the orange line all come around 81,000 on Friday, the 4th of April. So let's keep that in mind as well. That very well could be a bottom, and then we kind of just go upwards along. Maybe we come back, we pull back down here until Friday next week, and then kind of just chop sideways heading into the CPI data. That kind of makes a lot of sense to me because I think everybody thinks that the CPI data is going to be positive and that we're going to bounce. And regardless if it's negative or positive, we're probably going to bounce from here. This will be a turning point and where we do really see a significant rally upwards, maybe heading into June or something. Maybe just April and part of May, but possibly all the way till mid-June. And then see a consolidation over the summer, maybe. And a continued rally later in the end of the year. That's what I'm looking for. That's what I think is going to happen. So this makes a lot of sense too. Look for Friday. Yeah, right here. Look at that. They all intersect right there. So that is it's beautiful. It's a beautiful thing, man. Three significant lines that I'm looking at intersecting. And you saw it play out right here. You saw it discovered right here. That makes a lot more sense. That would catch everybody off guard that's looking for us to come down further. And maybe that day we do get a wick down a little bit. So maybe we come down here, chop sideways and upwards, and then possibly on this day we get that wick all the way down to 78, or something similar, but then close back above 82. Who knows? Just a bunch of stuff to keep in mind, and it all meshes with the, at least looking at the candles in the price action. I haven't even looked at any, you know what? Oh, I don't want to do that. Oh, but you know what? I do want to do this because we got the, we got the blue buy signal on the, I didn't even talk about that. Hash ribbons indicator at the very, very bottom here. You can just see a little, I don't know why, it's just like a little half of a circle. But if I just click on it, you can see now that we got our blue buy signal right there. Now, that doesn't always mean that Crown, he leads you to believe the price action is never going to go below this previous low here. And it very well may not, as I pointed out. It's at 77.3, something like that. 77.400 it was. And is that right? I think it was 77.749. Yeah, it's around 77.700. So that very well may be, as we saw that orange line does come down to 77.749. But remember, I was talking about back in August. If we go back to August, where we did get this other blue buy signal on July 23rd, what was the low before that? The low before that was right here. At about 53,600. And after we got our blue buy signal on the 23rd of August, we came down to the orange line, mind you, to about 49,000, so $4,000 below it. And then once again, we came to about 52.8 or so, which was below it again. Just barely, but still. So in that instance, we did fall below it by, almost 10%, right? So at least by a significant amount. So keep that in mind. So that's the hash ribbons indicator. Then, you know what? Let's just briefly look at the stochastic RSI, which is the red one here in the middle. And we don't want to look at it on the daily. We want to look at it on the weekly. Now, Crown has a different stochastic RSI that he uses, that he made up, and it's different from these other ones that are pointing up. He always, every video he says down, momentum's down on the daily, on the 3-day, on the 5-day, on the weekly, on the 10-day, blah 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 blah. But he's using his own oscillator that he made up, or the caretaker made up, And it's different from just the regular ones that the built-in ones here. You can see that we are turning up on the weekly. And are we crossing the 20 line? We are on the blue, on the faster indicator. Well, all I have to do is look to the right. Duh. No, not quite there yet. We're at 1880, 1890, so almost there. But of course, I think that both those have to turn up now. And then we also want to look at the 2-week, because we want both of those turning up and crossing up. Now the 2-week has yet to turn up, but the 2-week is just approaching that 20 line, and it ends. When does it end? In 5 days. At the end of this week, we also get the close of the 2-week. And so maybe that's what we're doing here with this little rally, is we're keeping the 2-week stochastic RSI up around the 20 region, and then in the following 2 weeks it will be turning up. So in 2 weeks and 5 days from now, we will see an upward turn on the 2-week stochastic RSI, which will be really, really big. If we see both those turn up like that. And we'll feel the rally. So that's a nice, pleasant note to leave off on. And this was really supposed to be a short little video, and it's not. So if you stuck through this, go out and check out Alto IRA. I have a link on. Well, I just posted the link there. It's not a. I don't get any money for it or any sort of benefits from it, but I do have a link to Alto IRA somewhere in my description, and it's really the only link that I have there. And like I said, they don't give me any money, but I had a bad experience with the other crypto IRA company that is shilled on many other platforms. And yeah, they treated me like shit and didn't give me any support, and wouldn't allow me to open up an account. And I still have no reason why. Had something to do with KYC and my official California driver's license. And what else did I present to them? There's 2 documents that I presented, and same documents that I present to everybody else, and without any problems. And they said this is not acceptable, and we take KYC very seriously. And I'm like, what the hell? And I still don't know what the problem was, because I didn't get any customer service support after multiple emails, and they just didn't respond. So that was the one. That's the crypto IRA that is shilled on all the other YouTube channels, and I do not support them. But I have had nothing but a pleasant experience with Alto IRA, and they are very easy to work with. I haven't had to really email them. I did in the past, and I've noticed lately that they do have a message that, due to high volume, they may be slow to respond. But I haven't had to interact with them lately. But when I did back in the day, and I had just a simple question, I got an immediate response, and they were very, very helpful. So that's that. And I recommend them. They use Coinbase as custody for their assets and yada, yada, yada. And yeah, there you go. And so we'll see you later. And subscribe to the channel. And wake up!